Yay. Okay. Here we go. Let's see. Where's my waiting room? I will either reshare this. And then I'll close up the waiting room. Hello, everyone. Thanks for joining. Hi. Who do we got on here? Let's see. We've got Lisa. Hi, Lisa.
Hello.
Hi. And then I see Violet.
Hello.
Hi, Samuel, Tan, Wanisha. Is that right? Did I say that right?
Onisha.
Oh, Nisha. Sorry about that.
You're okay.
I've got, let's see, Samuel, Violetta, Tan. Welcome, guys. Welcome. We're going to give some people a couple minutes to log in, and then we'll get started. Hey, someone's jamming. I'm going to go ahead and mute you guys. All right, Mike, can you hear me okay?
Yep, coming in loud and clear.
Fantastic, and I can hear you too.
So what I like to do too is, and you can do it however you like, but if like we've kind of assumed some questions that they might have, and they're obviously good stuff. I mean, there's a lot of good stuff in here, but somebody may have a specific question, and we want to make sure they're welcome to raise their hand. I think those questions are more valuable than stuff that we put in there that, you know, we expect they might want to know about. I mean, they may not want to know that. So anyway, I just throw that out there.
Yeah, for sure. So guys, gather your questions as we go through this. If you already have some, yeah, let's get everything answered. And I'm gonna go ahead while we're about to start. I'm gonna go ahead and list mine and Mike's Calendly links. Guys, if y'all have to go, I completely understand. Don't even worry. Just if you have questions or if you don't make it to the end, feel free to book a call with us. Either one of us, both of us, we can answer any questions. We can go through this whole thing with you individually if you'd like. And then that way, if you guys, I know life happens, so just feel free to book at these links. And then that way, we can get everybody taken care of.
Well, I would personally be very offended if anybody leaves, but that's okay. I'm teasing.
All right, well, it's about 6:30.
Yeah, let's rock and roll.
Yeah, we can go ahead and start. All right, guys, welcome. Welcome. This is the Houston/Harris County first-time homebuyers class. We're going to be talking about some costly mistakes that first-time homebuyers make in some cases. So we want to try to get to them before you even try to make them. So let's go ahead and see if you guys can go ahead and test out the chat box. I know that a lot of you guys were able to vocally say hi, but if you weren't able to, if you want to just text hi in the chat, and if you have questions and you're not, you don't want to forget them, you can go ahead and type them in here too, and we'll get to them as we go. Hi. I got one hi. I got a hey.
A hi from Zoo.
Yes. It says Zoom user. All right. Looks good. All right, guys. So as a first-time home buyer, you everybody's going to get concerned. They're going to get stressed out, intimidated, anxious, uncertain, especially with the market and the way the market has been going up and down. A lot of people have a lot of stress. This is one of the biggest things you guys will ever do in your life. Next to getting married, this can be one of the most stressful events. But that's why we're here. We want to talk you through it and hopefully get you from start to finish, without you guys having to feel all that anxiety. I know I had a lot of questions and felt all sorts of things when I first bought my first home. I don't know about you, Mike. I don't know if you had the same
No, I can tell you,
experience.
when you're going through this process, and even I was just telling Diana that I bought a second home a couple years ago, and when people don't get back to you, you immediately start wondering, oh my gosh, what did they find something? What am I going to get approved? And there's just that unnecessary stress that you go through unless you feel comfortable and you're having communication. It's all a communication thing. And so it's our job, both of ours, Diana and myself, to make sure that you understand what's going on, and then if you choose to go through this process, that you feel comfortable that you're going to know everything that you need to know. We're going to be very transparent throughout the whole process. So I think that's really important, because that takes, there's going to be stress anyway, but it'll take it way down if you're being communicated with.
Yes. And I don't know about you guys, but if you could buy a home today, how many of you guys are ready to go if you found out you could be qualified for a home tomorrow? Or how long, what is everybody's timeline? If you want to type in the chat, just give us an idea what everybody's looking at. How long have y'all been thinking about this? I know it's different for everybody. Some people wake up and say, hey, today's the day. And some people are planners. Some people say, hey, 6 months to a year. It's 6 months to a year, 3 to 6 months. Awesome. Awesome. Anybody else? 6 months. Good deal.
I can't tell you how smart that is to come to an event like this, learn what you need to do to get prepared for that, and you just have a plan. And Diana and I we're here to put you on the right course so that can happen.
Yep, exactly. All right, so let's move forward. Well, this is us. I'm Diana. I am a realtor with EXP. I have helped several first-time home buyers. Actually, I would probably say that is my specialty. I love, just excuse me if you hear a crying child over there. No, I love helping people. I actually come from a customer service background. I've worked at Disney World, and some other big corporate places where I've just learned to love people. So moving into real estate, it was so natural for me. And I think I just have such a passion for first-time home buyers, because I know where I was and I've gone through this before. And I'm still going through it, moving now into looking at, a investment home or a vacation home. It's always a new process. So I'm here to help you guys. And if you guys have any questions along the way, that's what I'm here for. And I'd love to help you guys. And then Mike, if you want to talk a little bit about yourself.
Well, I'll be real short. My name is Mike Durr. I live in the Kingwood, Texas area. I've been here for over 30 years. I've been in the mortgage industry for actually in December, it'll be my 26th year as a mortgage originator. And my background is I was a teacher, a coach, and I liken the teaching and coaching part of it to be exactly what I do when I'm helping people figure out how to get a mortgage. We teach them, we guide them, and that's my passion. And like Diana, I love first-time homebuyers because they don't know what they don't know, and they're much easier to coach than somebody that has an attitude. So
Exactly. So, all right, let's start off. What are the steps to home ownership? So coming here, like Mike said, this is great, especially for you guys who, have some time and you're wanting to wait a little bit. But even for those of you who aren't, if y'all are ready today, coming to a class like this really helps. I didn't do one. I wish I had done one. There were so many things I didn't know going into my first home purchase. But yeah, no, this is a great first step. Next would be to go ahead and get your pre-approval from a mortgage broker like Mike. So you would contact them and go ahead and get qualified, and we'll go through those qualifications here in just a little bit. Once you get your pre-qualification or pre-approval, then we're ready to go and start looking for a home. That approval is going to tell us about how much you guys are approved for, what kind of terms, what kind of payment, well, not payments, but that'll really help narrow our search so that you don't fall in love with a home that's $1 million. Although, if you want to get there, let's do it. But this will just really help. And then after that, once we find a home that you really do love, we're going to go in and make an offer and negotiate some things. Right now, personally, I've had a lot of really good success with negotiations, especially in this market. I highly suggest, especially if you're renting, this is a great time for, in my opinion, for buyers. You can always refinance later on. So, rates are almost irrelevant just because, you are going to have that opportunity later in the future. But right now you're not having to bid 50 grand over list price. And that's so big because a year ago, those people who bid that way, who purchased homes that way, even when it's time to, if they get the opportunity to refinance later, they can't lower what they purchased the house for. That is set in stone. That is, they paid $400,000 for a $300,000 house. Even when they refinance, their total is still at 400. Granted, of course, you get equity and whatnot, but that's the one thing that's good about now is, buyers have the opportunity not to have to go in so aggressively. Anyways, so once we go ahead and negotiate a contract, we're gonna hope that it gets accepted. Once it gets accepted, we're gonna do some home inspections. I highly suggest doing a home inspection. It's definitely up to the buyer, but I would probably never suggest moving forward with that one. That's going to give us so much information, and it's going to give us more of a baseline to negotiate even further. What needs to be fixed? What do we need? What's it called? Compensation for to have fixed. So yeah, so that's just another way to negotiate even further. And
Let
then
me throw in
ahead.
on that too. The
Yeah.
inspection, the return on investment on an inspection is tenfold in most cases. So what happens is you're going to go in and have some really smart person that knows all about houses to tell you exactly what needs to happen to make that house or to keep it from going bad on you. And then you go and you negotiate to get those things fixed, but you get the money off the price to do that. So it's a huge investment, and I really think you're silly to not have a home inspected. Unless you've been living there, that's the only reason I would say that you don't need an inspection.
Yep. Yep. And you're so right about it being tenfold. I know I have someone right now who, went from $5,000 concessions to almost 20.
Wow.
And that's just because she had an inspection done and there were things that they didn't want to fix. So we needed them to take care of them in some way. So we're getting it in the form of compensation.
And the inspection was like $450 or $500, something like
Yep.
that. Yeah.
Typically, and sometimes even less. Sometimes I've seen them as low as about $375-ish.
Yeah, depending on the size.
About $450, $500. And then of course, then we move on to financing, and you'll finalize your financing with Mike, and he'll walk you through that finalization process. Then you sign, we schedule a time for you to sign. You're going to sign on the dotted line, and then the house is yours. You get to move in, you get the keys, and start your new life building this equity in your newest investment.
Yeah, it's pretty cool. Let me go back a step and just tell you that there's 4 things that we get when we pre-qualify. The first thing is an application. The second thing we do is we pull credit. The third thing is you give us documents, and what the documents do, that's your W-2s, your paycheck stubs, your bank statements, that supports the information that we got on the application. And then the final step is we run that information through an automated underwriting engine, and it kind of throws out an approval or maybe not an approval. If an approval comes out, then we go, okay, they're qualified. We're going to get them a pre-qualification or a pre-approval letter. They're going to go out and they can start shopping that day. If it comes back and it tells us that you're not quite there, it tells us where we need to go to get you there. And so it's just about as good I mean, obviously we all want to be approved, but if you're not, we can go, okay, now what are the steps we've got to do to improve this so that we do get approved? So.
Yep. All right. So one mistake you make, or some first-time home buyers make, is not knowing that they have options. So a myth is you want a first-time home buyer's loan. Well, there's several loans out there, and depending on, what you can potentially qualify for, some of these are going to have benefits that others don't. So for example, we have the conventional, the FHA VA jumbo loan, and I'm sure, Mike, you might have some more products that I don't have listed here, that, depending on the person, might really benefit you in moving forward with a home purchase.
Yeah, I'll just be real brief on this because we could spend all night on it, but FHA is the typical first-time home buyer program, but one that's right alongside of it is a USDA program, and the USDA has 0% down, and it's actually one of the best loans out there, only second to a VA loan. So if you're a vet or married to a vet, then the VA is by far the absolute best loan that you can get. And what we do in this initial process is we find out who you qualify for, what loan you qualify for, then we present them to you so that you can see what the options are. And they all are a little bit different. And there's a few little subtleties about how long you're going to be in the house and that kind of stuff. But it's really our job to present you with options, and you get to choose those options.
Yeah. All right. So let's dive deeper a little bit. Mike, I'm going to let you go ahead and take over from here. So this is FHA.
So FHA loan, yeah, I really like the FHA loans. This is the characteristics that FHA loans have. They are they're broader. So at 3.5% down, they go down to a credit score of 580, and that's real. I mean, you can have a 580 FICO score and qualify for 3.5%. The rates are, well, if you're doing it at 580, the rates aren't that low. And what's going on with the rates is your credit score and your interest rates, they're similar. The lower the score, the higher the interest rate. If you come into an FHA with a 660 FICO score, you'll get a great interest rate. They allow you to buy more house based on your debt ratio. So this higher DTI ratios are accepted. FHA likes first-time home buyers, so they've made the ratios broader so that more people will qualify for them. And then, of course, it says here about an adjustable rate. I honestly can tell you that I haven't done an adjustable rate loan in 15 years. I like fixed rates loans, but they're out there, so some people can do them. All first-time home buyer down payment assistance programs are based on FHA loans. And it's a longer conversation to go in, and maybe even a different presentation, but the seller can pay up to 6%. I've never seen that happen, just because it doesn't cost that much. But FHA loans are a great program. That's where most people get their first house. And are there any questions about those? If not, let's shift to the conventional loans, because conventional loans they saw how popular the FHA loan has been, and they came in and made one that is similar and to kind of compete with the FHA loan. So their first-time homebuyer loan is a 3% down. They like higher FICO scores, but 620 is probably the base for a conventional loan. There are some positive things about the conventional loan that I like long-term is when you put less than 20% down, you have mortgage insurance. FHA mortgage insurance lasts the whole time you have the loan. On conventional loan, that mortgage insurance goes away. And so I think that the conventional loan, if we can get you in that conventional loan because of that particular reason, I look at the longer term better option. Okay, so also the conventional loan goes up to 647,200. I'm sure that's very interesting to people. But the FHA just this year went up to 426.80, and that is huge for FHA people. So both are very good. A lot of times your credit score dictates where you go, but these are two of the options that we'll definitely present to you.
Yes. And then this is just a slide that kind of tells you a little bit about what's determining. Mike touched on a lot of these already. If I think all of them was your credit, your debt to income, how much of a down payment do you have? That's going to determine your rate, and then your mortgage insurance. So with all of those combined, that's going to give you kind of a formula to come up with what you qualify for moving forward. All right.
There are subtleties on each one of them, and the credit is the one that I think that we have the most control over. And that's a whole. We're going to do another one of these, and we'll do it about credit. I think that's a really good idea.
Yeah, I think so. All right. So mistake number 2, not getting a pre-approval. This is really just for you guys to understand. Like I said before, you want that pre-approval because that's really going to determine what we're looking at, where we're looking, and different areas of this city especially. I've seen way different markets from neighborhood to neighborhood. So getting that pre-approval is a big thing for us to really narrow down what we're looking for. So back to, go ahead.
Well, I was just going to say, without a pre-qualification or a pre-approval, a lot of realtors won't even talk to you. Or if they do talk to you, they're going to tell you, go get pre-qualified, then come talk to me, because they don't want to get in their car and take you around and look at 14 different houses and then find out at the end that you can't really afford to buy a house at that time. So that's a big deal.
Yes, definitely. So this is just the pillars of a mortgage. You've got credit, income, and down payment. And Mike can actually help you guys out if you have credit questions. He can take a look and, point you in the right direction to see if maybe we can get your score up. And Mike, I don't know if you want to talk to them a little bit about that.
I'll just be brief on it. So just about every credit report we get a credit score for the 3 bureaus, and then we get a potential score if the borrower or the client did some specific things. So the credit score will tell you a lot of times what your score is, but it'll also give you potential to move up. And then on top of that, because I've been in this business for 100 years, we've learned things on what helps people with their credit score. And I was telling Diana just recently that I helped somebody increase their credit score 40 points. And the reason that is helpful is because they got a better interest rate. That 40 points bought them a better interest rate than the lower FICO score. Even though they qualified at 630, at 671, their interest rate was a lot better. So that's why you kind of want somebody like me that's been around, that knows credit forward, backwards, inside and out. I help a lot of people like that.
Awesome. Okay, so let's keep moving forward. Okay, loan pre-qualification. We've kind of touched on most of this already. Income, assets, credit. So I don't know if we want to talk a little. Do you have anything more on pre-qualification, Mike?
Yeah, so after we get you pre-qualified, what we're going to do is we're going to give you what I call is a detailed mortgage estimate. And this detailed mortgage estimate will, as a first-time home buyer, I guarantee you're going to look at it and you go, oh my gosh, how much money does it cost? And it is intimidating a little bit, but what we do is we show you exactly where all the money goes. We show you how much your payment is going to be, and we show you how much money it's going to cost you. Okay. And it's the same thing that if you've got 0 down, then you don't have a down payment. But if you do have closing cost, and that's one of the things that when I bought my first house, I didn't realize I had the down payment, but I didn't have the closing cost. And I remember my wife and I, we scrambled the day before. We met with the mortgage guy a day before we were going to buy, and he told us how much money it was going to be, and we just were shocked. And all of a sudden we scrambled around, and I don't know where we found all the $3,000, I think is what it was. But we lived out of a penny jar for the next 3 months just because we had to scramble and get every penny we had. That won't happen to you. I pledge that won't happen to you. You'll know upfront how much it's going to cost.
I would like to say too, that also happened to me. I wasn't the day before, but just a couple weeks before, finding out. And then I think I had to look for people who could lend me gifts. And I just tried to pull from anybody I could. I ended up paying most, if not everybody, back for the help. But yeah, no, that's one of the biggest purposes of this class. One of the reasons that motivates me so much is that's, something that not everybody discloses, and it's very important to know these things, but not that you shouldn't be intimidated. But I can tell you right now that I have several clients getting concessions from sellers right now, because some sellers are scared. These houses are now sitting a lot longer than they have been over the last couple of years. And I've got buyers who are walking away not paying any closing costs and getting down payment assistance. So if I can negotiate for you, if you let me work for you and we can get that negotiated with the seller, you might be more ready to purchase a home than you think. Not saying that this is typical, not saying it's going to happen all the time, but there's a lot of sellers right now who are ready to work with buyers as much as possible. And there's different ways that we can go about it to get you into a home, even if you don't think that you have that down payment or those funds right at this moment. So yeah, just a little bit of insight there as to what's happening out there. And then this is some loan pre-qualification do's and don'ts. So definitely call us if you have any questions. Mike, me, anybody that you're working with, ask those questions. That's what we're here for. And then next would be to continue living at your current address. A lot of this is basically not making too big of changes, whether for the better or for the worse. You want to keep as consistent as possible, because I'm sure a lot of these factors will affect Mike's end, trying to trace what's happening everywhere, because all that information is needed as we go through to closing.
Well,
Go ahead.
All the things that she's got on here are the do's and the don'ts, are real deals that smart people have done. People have done these wrong things, changing jobs, getting fired, changing their bank account, all of those things. You think, they just don't think that you operate in a bubble. Well, the underwriter is going to ask you for all those financial documents, and they expect it to be consistent. And if it's not, you can still get your loan done. It just makes it harder. And what we're trying to do here is we're trying to do it so it takes that stress away. You don't have to find all your documents because you changed bank accounts. So just keep these things in mind, that and this is a list that we'll be able to provide to you if you have a question about it. And anyway, it's just real important to just stay in communication, be very transparent with your loan officer, with your realtor, and everything will be perfect.
Yeah, and I agree. I think we should get this list out to you guys, especially if y'all are looking to purchase a home anytime soon. All of this information on here, I know it's a lot, but it's really important to, even starting now, it helps the process go a lot more smoother if you know these things ahead of time.
Absolutely.
All righty. So, pre-approvals, underwritten pre-approvals. Mike, do you want to talk a little bit about this?
Yeah, there's really two animals out there. There's the pre-qualification, and then there's the pre-approval. And really, depending on who you deal with, it used to be different, but now a pre-approval has to be underwritten by an underwriter. Okay, so that means it takes a little longer to get it done, but it's like gold. It means that you're never going to have that problem of going 3 weeks and spending money on doing stuff, and then all of a sudden find out at the end that you can't close. That's the worst thing that could ever happen. But the pre-qualification, as good as the person that you get it with. And so you have to be careful about that. The way we do our pre-qualification is the way that pre-approvals used to be done. So just be aware, we take it very seriously. We don't want to send our realtor partners out there on a loan that won't get done. We will tell you if it's going to be on the edge. There are some loans that we do, they're on the edge. They're on the edge of qualifying. Their debt ratio is right at the line where it tips over on the wrong side. And you're going to know that, and you're going to know that you have the opportunity to make that choice, whether you want to go through that process or not. Now, fortunately, we come on the right side of almost all of them. I would tell you, I've been in business as long as I have. We've missed some. It's been some time since we did that. When she's talking about the rate hold, because rates have been so volatile lately, most of the underwriter and the lenders that we deal with will want to have a pre-approved loan if you're going to lock a rate, because they don't want to lock the rate up unless they know that you're going to do that loan. So that's just another part of that. But yeah, there's subtleties there. It's a great slide for you to be aware that there's a difference between a pre-qualification and a pre-approval.
Yes. And Mike, you're so right. There are lenders out there who don't do their due diligence like Mike does. Even as recently as 4 months ago, I had a client who was just probably really with the wrong lender and came to me. Everything looked good from what I could tell, but I didn't know their lender. And turns out the lender did not do their due diligence, and that is so important. I'm putting a lot of faith in my lenders. Mike, I'm sure you have a lot of people putting their faith in you. You want to be sure you're going with somebody who's doing their homework, and it can be a lot. It's paperwork. They're going to ask for a lot, but don't be upset by this because they're just trying to protect you in the end. If they don't do this ahead of time, we can get to the end. It could be the day before closing, and then they can tell you, you know what? Sorry, we missed something. We didn't do what we were supposed to do. And we don't want that. We don't want that. And I feel the most heartbroken for those clients who are in that situation because, there were things that the lender could have done. There were questions that they were supposed to ask and they didn't. So that's why you want somebody like Mike on your side who really knows what they're doing, who cares, and who's going to do their due diligence, because it's very important. And then we'll move on a little bit more about the VA loans. Mike, if you want to talk about this, we talked about this being one of the best options on the market if you guys are eligible.
Yeah, so the VA loans, the reason I like them is that they're government sponsored, obviously. They also come with the lowest interest rates available. Like they give our vets, which are deservedly so, the best rates out there. And then the term that she's got, there's no MIP, mortgage insurance premium. Like there's no monthly mortgage insurance premium. There's 0% down. And a lot of times the closing costs are paid for by the seller. Now, the thing that she's got here is the funding fee is based on your category of if it's the first time that you've used a VA loan or a second time. So the first time you use a VA loan, there's a 2.3% upfront mortgage insurance premium of the loan that you get. So if it's a $100,000 loan, it'd be $2,300. If it's a $200,000 loan, it's $4,600. That's put into your loan, so you don't actually pay for that out of pocket. If it's a second home, then it goes up to 3.6. The funding fee, if you have up to a 10% disability out of the service, they waive the funding fee. So, and there are a lot of people that come out of the service that have medical disabilities. So that's waived completely. There are additional things that are good about it, and it's in regards to taxes. You get some superior discounts on real estate taxes if you're a vet. And if you have medical disability, in that case, it can tier down to actually, in some cases, pay zero. So the VA loans, one, you deserve it if you're a vet, and the industry gives you that. So yeah, the VA loans are awesome.
We'll touch a little bit too on jumbo loans. Mike, if you want to go into a little bit just about that.
I'll do brief on the jumbos. The jumbos are bigger loans, anything over the 647, 200, and they come with different guidelines. They're a little bit harder to get. Usually you gotta have a little bit better credit, and you've got to have more money down, and the interest rates are not as good as the conventional rates. So that's all I'm going to really say about it. It's just a tougher loan, but if anybody is interested in a jumbo loan, we ought to talk and just make sure that, you know, the parameters are there. The people that are spending $8, $9, $1 million on houses, they usually have their act together financially.
And then this just touches back a little bit on rates and MIP and PMI. So rates here, you'll see it's dependent on the product type, your credit, your debt to income, how big of a loan are you getting, and the loan to value. And then your PMI and MIP. So those are both terms. I know that not a lot of people know. Mike, if you want to touch on this part a little bit
those
more.
are both the same, but I have some really good news. Just today, I got a call from one of my lenders, and in most cases, the interest rate is based on the FICO score, the loan to value, how much money you're putting down, or even the product, in some cases like a condo as opposed to a single family. But there is one of my lenders right now that's offering a program where they take all the loan level increases away, and they don't care if you have a 620 FICO or an 800 FICO, you get the same rate. Here's the catch. You've got to have an income less than $90,800. The reason that number is 90,800 because that's 100% of the median income in Harris County. And it could vary if you're in different counties, but that's still a lot of money. And it's also, you could put 3% down on a single family home with a 620 FICO and get the same interest rate that you'd get if you had an 800 FICO score. This is going to allow you to have a lower payment or buy more house. And it's really a good loan. So it's also one of my favorite lenders. So let me talk about the PMI and the MIP. One says private mortgage insurance and mortgage insurance premium. And there's on FHA, there's an upfront mortgage insurance premium. On a VA, there's a upfront mortgage insurance premium. On the USDA, there's an upfront mortgage insurance premium. On conventional loans, there's no upfront mortgage insurance premiums, but there is mortgage insurance on a monthly basis. Anybody that does less than 20% down. So you're probably going, whoa, that was so much. Trust me, we'll talk about it later, but that is a pretty accurate look at what's going on with that. Is the government entities get an upfront premium, and then they get a monthly also. So the private entities don't get the upfront. Does that help? Did I totally confuse you? This girl down at the bottom of our picture, she's confused.
Is that Kimberly's confused?
It's more than you really need to know right now anyway, but.
Yeah, and that's, I don't know if you guys can see the chat, but I keep reposting mine and Mike's calendars. If you guys want to book a call, I know this can get confusing. We're just kind of trying to touch on, you know, the topics. So, you know, gather your questions. We'll have a Q&A here in a second. But if we don't answer it now, we can go further in depth later. So definitely keep all that in mind. All right, so fees. Let's talk a little bit about fees. Here again, Mike, you want to take over here?
So there's the way that I tell people to shop is there's a lender fees, and then there's a bunch of other fees. Okay, so the lender is in section A of the disclosure, the loan estimate that you're going to get. And when you're shopping, you really need to focus on section A. Okay, that's all that really matters when you're shopping for mortgage guys. The interest rate and section A. The rest of the information on the loan estimate is exactly just that. It's estimates of what the appraisal is going to cost, what the credit report costs, what the title company's costs are, what the taxes might be. All of that is stuff that are third parties. So you got title company, yeah, but most of the time you don't shop for that. The seller's agent generally directs the person to whatever title company you're going to close with. The appraisal fee, the credit report, all those things are third parties. So really, it's real simple. You focus on the lenders, section A, and the interest rates. Once you've done that, the battle is over. You can decide who you're going to do your loan with. If it is all about the lowest rate and the lowest fees. Now, that's my cut on it. But they're out there. I'm telling you, it makes you feel like everybody in the world's got their hand in your pocket pulling out money. That's what it feels like.
Yep, right. And then let's see. So things you can and can't use for down payment and closing costs.
Okay.
So this slide here is just giving you guys a little bit more of information of where these funds can come from. So gifts are a great source. If you've got access to somebody who can gift you that money that you need, that's a great way to start. 401k, retirement accounts. Mike, if you want to confirm that 75%.
Well, yeah. So the retirement accounts, you can get money from your retirement accounts. The gifts can be, as long as they're sourced. Stocks, bonds, cash, a little sketchy there. But the one I like that's not on here is you can sell stuff. There are some people that have an old car in their backyard, or they've got a old guitar or a motorcycle or something that they're just not using anymore. And we've had a lot of cases where people were able to sell things, and they have to do it in a very strategic and paper-worthy fashion, but they can use those funds for their down payment. Credit card is a no-no. Most cases. A loan, you can do a loan for a down payment, but you've got to disclose everything about it, and it still has to fit in your debt ratio. And then the biggest one that we see all the time is the undocumented cash. People have mattress money. You can't use it. It's non-existent to a lender, and it's the biggest challenge that we have, and we always try to get that message up front, because it is, oh yeah, I've got $15,000. What 12 of it's in cash, we can't use it.
So Mike, I actually have a question for you on that one.
Yeah.
Can you season the cash?
Well, okay, so 2 months is what they're looking for. They want to see 2 bank statements that show that money in there. But the strategy that I use more often than not, if you've got that cash, is you've got a job that's paying you your weekly payment, right? So what you do is you pay your bills out of your cash, and you let the money that's coming from your employer to fill up your bank account. Now, you still got to have enough time to do that, but that's a strategy that we use with most of the people that have cash.
Okay, nice. Good to know. All right, let's move on to mistake number 3. Using your bank. Wells Fargo, Chase, these banks, they are big corporations. And actually, here's just a few things as to why you don't. It's not necessarily the best option for a lot of buyers. You're just a number. They're like I said before, they're huge corporations. They don't have that many products. More often than not, somebody like Mike, who's a broker, can go ahead and find you what it is you need, work with you. So that's, even though you have this, or what you think is a relationship with your bank, it's not always the best way to go. They can't always give you that best deal.
Well, they're slow too. They're really slow. Just an FYI, and I hope I don't incriminate myself like this, but I've worked at Chase in the mortgage department. It was horrible. I lasted 6 months. I'm not sure it was 6 months. I worked at Regions Bank. I did mortgages for them for about a year. It was brutal. I've worked at one of the biggest credit unions and ran the real estate department. And actually that was a little better, but the banks are generally way slow. They don't communicate. And most people, particularly realtors, don't like them because they can't get any information about what's going on in the process. So I'm not a fan of banks either. And as a broker, I think I put myself in the best position to not only communicate, but also give great service and give great rates.
Yes, thank you, Mike. Oh, and we've got a question, credit union. I think we just touched on that a little bit. And we're not saying, they don't have anything for you. It's just like we're just trying to tell you that being a broker, you just have more options. You've got more access. You've also just got a better relationship with the individual.
Here's a good example. On a FHA loan, even though FHA will allow you to go down to 580, the bank or the credit union won't do your loan below 640. They just don't want to mess with it. So that's a perfect example of the limitations. It's not that they don't or they can't do it, they just don't want to.
Good call. I didn't realize that they could still do that. I guess I've always been, if anybody's told me no, I've just said, taking it for what it is.
Yeah.
Okay, nice. So mistake number 4, buying directly from a builder. This isn't necessarily a mistake, but financing from a builder could cost more than you think. So going on to this slide, they have different ways to bait buyers. You've got closing cost assistance, and then you've got the sales agent. Well, when you don't have a realtor, you don't have anybody fending for you. The sales agent works for the builder. So when you go to them directly, they are looking to help the builder. That's where their interest lies. So you really would like to go in there with your qualification from your own lender and with your realtor in hand, because that's what we're there for. We're there to protect you. We're there to fight on your behalf, in a sense. Because at the end of the day, the builder, they have their specific lenders that they work with, and some of them look great on the outside, but you really need to sit down and look at these things side by side, because you could end up paying thousands upon thousands of dollars more over the course of 30 years than you would have had you gone with your lender that you're coming in with. I feel like it's the same way with cars. If you go in with your pre-approval, this is the way I'm going, then they sit down and they try to say, oh, well, you've got a 3%, I'll give you $5, but you're going to pay $5 or 5% for the next 10 years. Well, that doesn't work. It's the same thing with a house. It makes a big difference in how much you're paying monthly and what that final number looks like after the course of so many years. It can add up to be quite a bit of money.
So this is, I love you for going over this point, because builders are interesting to deal with. I'll just put it like that. But what I suggest to you to do is to find out what the builder's finance is going to cost you. And usually they'll throw out some money as incentive for you to use their builder. But then you come to me or any broker and say, give me a quote. And then you compare them, and then you take it back to the builder. And in most cases, the builder will either pass and let you use the lower deal, or they'll match it, which is the best case. You get money that they're going to give you, and you get the lower rate and the lower fees. So I will do that for you, and knowing exactly that you're using me to get that rate out, I will support you on that. So just be aware that you've got a friend out there that'll help you with that.
Yeah, 100%. And same thing with me. There's builders out there, they're gonna build these homes, and they're looking at these homes all day, every day. So my job is to go out there to help you get the people who you need out there to review these homes, the inspectors, and go through the negotiations. Working with a builder is very similar to working with a typical seller. They're flexible in their pricing. Just because they say, hey, this house is 500,000 doesn't mean that we can't get you a better deal. And it might come in different forms, but that's what I'm there for. I'm there to find what it is we can do that they're not advertising, because people are coming in off the street and saying, hey, that looks great, I'll sign on the dotted line, but they're not being represented. And that's not the case. You don't need to do that, because I mean, I'm working for you for free.
Well, one other thing about that too is you keep in mind that you'd think that you wouldn't need to get an inspection on a new build. You do. You absolutely
do. And that's going back to, these people are looking at these homes every other day. Sometimes they need a second set of eyes. There's things they can't see anymore because they've seen it so often. They're just blind to some things. And that's there again where the inspector and I come in to kind of fight on your behalf, the things that need to be fixed before you take ownership. And that actually leads into mistake number 5, is skipping a home inspection, even with a new build. And And right here, you can see cost of skipping a home inspection could potentially cost you about $20,000. And I can attest to that because I've got somebody who is actually going to be closing next week. And had we not done an inspection, we wouldn't be close to the 20,000 mark that we're getting in concessions. So that's a lot of money that not only she would have ended up paying, but then almost paid double, because if she had gone in, paid list price, didn't do an inspection, and then found there's all these things that are wrong with the house, now she has to pay for those things. So here we got to go in and got them negotiated down. So now she's going to be able to afford those things as she moves forward. Without that, we wouldn't have had such a strong fight to get those funds taken care of. And
So
this,
what I was going to say is that when you buy a house, the excitement that you have when you just finish buying your house can be just wiped away in a split second if you go in and you find out that you've got $5,000-$10,000 worth of work that you have to do to get it up to speed, and it's a surprise. But when you do that in advance with an inspector, you know that you're going to get that taken care of. So anyway, that's all I'll say about that.
yep. And sometimes the seller will fix it, sometimes they won't. And that's where the negotiations come into play. We need to decide at that point, okay, is this the house for you? If they don't want to pay to fix it, and if they don't want to fix it, we really need to talk about it, because that, might not be the home that you need, because who wants to go into a home and not have the support from the seller to get it where it needs to be for you to live in it comfortably.
Yep.
So guys, we're at the end. So how are y'all feeling? I know it's a lot of information. So let's open it up for some questions. If you guys want to unmute, sorry about that weird thing there. If you guys want to unmute yourselves and ask any questions or throw them in the chat, let us know and we can touch on them real quick. Does anybody have anything? Who do we still have on the card? Carol, Violetta, Elaine. How do you feel about rent to own? Is it, are you talking about rent to own directly from a seller?
Like the owner.
Yeah, the owner.
You gotta be, it's tricky. You gotta be a little careful with that. It's taking it out of a arena where there's usually not an inspection. If you're living there, that's one thing, but they're tricky. And sometimes the sellers can change their mind, and I've seen people where they went bad.
Yeah, and not only that, sometimes they're charging a lot more than you typically would buying outright. Actually, most of the time they are. And the reason for that is they're trying to make as much money as they can off of you. And then if you default, they get to keep the house.
Well, there's all kinds of things that protect you. The appraisal is actually something that protects you, even though it is a cost. So if you don't do an appraisal, you don't know really what your value of the property is unless you get with a realtor. Same thing on the inspection. I mean, rarely do you have an inspection on a rent to own. You're living there, but a lot of times they've just got to check it out to make sure that house is going to be good. So I'm not saying it's absolutely a bad idea. I'm just saying you got to be cautious.
Yeah, do your homework for sure. My aunt has one. It looked nice the first few weeks, but seen a lot of deficiencies. Yeah, and that's why is you don't have as much protection going into that kind of situation. Anybody else have any more questions? Before you guys leave, I've there again posted our Calendlies in the chat. Here's Mike's on here if you guys are ready to go. What credit score do we need to have? We touched a little bit about that. Let me go back to the slide real quick. Now, if you're not at these measurements, you don't have to fret. I would still reach out to Mike to see about getting you where you need to be, or there might be something that he could do now to get you where you need to go.
So this is a good question. If you have a 550 FICO score, there's usually 30 or 40 points that I can help you get. If you have a 420 FICO score, we've got a longer journey to get that score up. It might take a little longer, but it's really just a process. The credit score is interesting. There's a little bit of art, there's a little bit of function in there, but we can fix that. It's just, you got to be able to pay your bills. And that's what lenders are wanting to do, is they want to lend you money, but they want you to pay it back too. So
Right.
That's a good question though.
Yeah, that is a good question. Anybody else?
Well, Diana, I want to tell you that I'm just so grateful that you allowed me to come on tonight. And hopefully I was able to give some information, but really it's all about you. Thank you so much. I feel very good about the opportunity to work with you. And if anybody wants to reach me, obviously that's my cell phone down there. I've got my website, and I will be calling you soon anyway, Diana. So I'm going to cut out. But again, thanks guys. Thanks for showing up. And
Real quick, Mike, we got one more question in the chat, if you don't mind touching on it.
No, not at all.
If that's okay. Difference between FICO and Vantage score.
So you want to stay away. Advantage score doesn't mean anything to a lender. The FICO scores mean stuff to lenders. There are all kinds of, I'm not a fan of the Experian Boost. I'm not a fan of any of the consumer credit reports because they tend to not be consistent with FICO scores. If you're aspiring to get to a certain level, you've got to aspire to the level that the lenders require. So I'd be very cautious. If anything that's not a FICO score is not going to be of a lot of service to you. And I have no idea what an Advantage score is.
Yeah, I've heard of it. I'm not too certain though myself.
There's an app on myfico.com. I'm a big fan of that app. It seems to be real true and consistent with what lenders use.
Very good. All right, guys, we're going to wrap it up here. I'm going to post our links one more time in the chat. But like I said, book a call with us. We'll touch on any questions. We can go ahead and get you guys pre-approved, or at least start getting y'all. Oops, sorry, that's the wrong address right there. We can start looking at what we need to get y'all pre-approved. And if you have any questions for me or Mike, just feel free to book with us, either one of us or both of us. We can get you through to one to the other as well. So yeah, I hope we get to talk to all of you guys. That'd be wonderful. Bring all your questions.
Yeah, thank you for showing up and taking the time to listen to us. So it was great fun.
All right, guys, I'll be sending y'all a video of this as well. So y'all have some, if you didn't get to take notes, you'll get to be able to look back on this video. So, all right, guys, y'all have a great night and a happy Thanksgiving. It's next week. So I hope you guys get some time off and with your families, and hopefully catch you on a call soon. All right, guys, we'll talk to y'all later. Bye.
Thanks, Diane.